For the longest time, I was wondering if the opening range breakout strategy would work for crypto because this is a traditional finance entry model that is used to trade with the big institutions and trade with institutional order flow, which means a lot more movement during these sessions, which happen to be three. So I'm trading the New York session, which is part of this entry model. You got to enter as soon as one of these stock exchanges opens. And so I use the New York Stock Exchange, which opens at 9:30 Eastern Standard Time. And it's been working very well. And I tracked for the last 30 days some important metrics, and I want to break those down to you guys so you guys can be successful trading the opening range breakout strategy with coins like Bitcoin, Ethereum, Solana, some of those higher cap coins that often follow what Bitcoin is doing. And Bitcoin is following the traditional finance movements, including the NQ, the SPY, which is the S&P and NASDAQ. And so I thought that this strategy could work. And so for the full month of March, I tracked multiple metrics to ensure that I had good data that I could use in the future. So I'm going to break all that down for you guys in a few. Let's just describe what the actual entry model is first, because if for those of you guys that don't know what the opening range breakout strategy is, you might want to know if you want to watch the rest of this video and make sense of it. So the first thing you're going to do on this entry model is you're going to find the first 5-minute candle that prints at 9:30 Eastern Standard Time. And so you're going to go to the 5-minute time frame and you're going to lock up that first 5-minute candle, which today, April 2nd, happened to be this bearish candle here. So you're going to go from wick to wick and you're going to draw a range. You can do it with 2 lines, you can use a box, whatever you need to use to delineate or to box out that first 5-minute candle at 9:30. Now, the next thing that normally happens is you're trying to see which way price is going to break. Either it's going to break the bottom of the range or it's going to break the top of the range. Okay. Another thing you got to understand about this entry model is that oftentimes the first move is a fake out or a manipulation is what I like to call it. And so the first move is always, I shouldn't say always, but often is a fake out. And the way that you want to enter this particular trade is you want to wait for the break of either one of these lines and then a retest. Okay. See if it comes back and retest and then leave. So once you block off that first 5-minute candle, you want to manage the trade with a 1-minute time frame just so you can see a little bit more detail what's actually going on. As you can see, it broke, it faked out, it came back in, came back out again, and then it did not close below this level. It came back in, right? So that's not the time to enter. The time to enter this trade is when it breaks one of the lines of the range, either up or down, and it comes back, right? It comes all the way back and retests that line. And you can see how this entry model worked perfectly on the specific day, because it worked exactly the way it's intended to work, which is wait for a break and then a retest of either the trend line or a fair value gap that was created on the way out. Okay, if you guys don't know what a fair value gap, I will link it in the description. I have videos on what that actually is. Essentially, it's you got 3 candles that form a gap, 1, 2, 3, because the bottom one and the top one do not intersect, and the space in between is a fair value gap. So it could be either it comes back to test just the fair value gap by itself and then take off. It could come test the trend line by itself because there is no fair value gap. It could just leave and not come back, also no retest, right? So there's multiple ways that this thing can be entered, but the safest, most reliable one is if there's a fair value gap plus a trend line that it comes and crosses through and then bounces out of it. So you can enter this multiple ways. I'm just telling you that that's probably the safest and most reliable confirmation for this particular trade. Okay, so now that you understand what it actually is, let's talk about the metrics that I did actually cover, or I did actually record. For the New York session, for all 30 days, I tracked whether it was effective, yes or no. Did the strategy work the way that it was intended to work if you follow the steps exactly? And if you did, how much profit did we get? And I need to break that down a little bit for you guys right now. So in order to understand this, you got to understand what risk to reward is. And so the risk to reward tools on the far left side, you're going to click on these 5 lines, not the first ones, but the second set of them on the left-hand column here. And you're going to choose either long or short position. So price can either go long up or it could go down short. Since we're entering a long, right, we're going up, I'm going to click right on the line where it broke as soon as I select which tool I'm going to use, right? So, and then I'm going to make sure that the bottom half covers the full range here because this is my stop loss range. So you got to understand in this entry model, your stop loss is going to go on the opposite end of where you entered on the 5-minute candle range. So you got the 5-minute candle range. Now I'm going to put my stop loss here since I entered on this side. Okay, so this range here, imagine it's $100. If I lose and it goes backwards on me, I lose $100. But if I win, then in this case, if I held 3 times the amount of my stop loss. So this gave me a 3-to-1 risk to reward, and that's how you read those risk to rewards. So this level here is 100. In this example, since we did 3 times that level, that's a $300 trade for this example. So now that you got what risk to reward is, let's go back and you can see how far out from that range we went. I'll cover that in the pie charts I'm about to show you. Retest type, did it retest? No retest. Did it just retest the fair value gap, just the trend line by itself, or the fair value gap plus the trend line together? Was my stop loss triggered? Was there manipulation, meaning was there a fake out before the actual move? And then did it come all the way back? So for this one, did price, once it left where we entered, which is this line, does it come all the way back where we entered? Because the reason that's important to me, because once I make my $300, there's a potential that it could come all the way back and I make an extra $300, right? Because there's always a pullback from a big move. And I want to know how many times it comes all the way back to where we entered. And that's important to me because of what I mentioned. I want to know whether it comes back because I want to double up my profits. And it happens often. So I'll show you the results. So here are the pie charts that I compiled for the New York session. Now for the effectiveness, all right, so it's like 90%, guys, which is amazing for an entry model. As long as you follow the steps correctly, this was the result for March. For the New York session, as far as how much profit we're able to get, 3-to-1 risk to reward seems to be the most common. So that's great news, because if we get at least 3, that means these other potentials, right? 10R risk to reward, 9 happened 3%, sorry, about 13% for 5R. You get the picture, guys. So there's money to be made here. So as far as what kind of retest, what kind of bounce happens and how often, right? It just touches the fair value gap and doesn't come back to the trend line only about 26% of the time. It goes to the trend line by itself without a fair value gap about 30% of the time. It pulls back to a fair value gap plus trend line about 26% of the time, and only 16% of the time does it not retest and just takes off. So there's some pretty good numbers here for retests. So I would wait for a retest more often than not, because only 16% of the time does it not come back to retest the line, and makes a better, more safer, more confirmed entry. So stop loss, this is probably the same as effectiveness. I probably should just put this in one pie chart. So about 90%. Manipulations, how often does it happen before the actual move happens? Like how often did they fake you out? About 60% of the time. That first move is not the correct move, so be cautious. That's where people get in trouble. Now, how often does it come all the way back? About 70% of the time. So more often than not, it's going to come all the way back after the move is made. So if you miss the move, maybe you can catch that move on the way back, right? Cool. So that's that data. Now, there's another piece of data that's also important, and that is the hypothetical that I did run to see which one of these risk rewards is the best, right? How long should I hold? Should I hold for 2 hours? Should I hold for 4 hours, 5 hours? Which is the best, most profitable risk reward to hold on to? In this example, like I just showed you, and I ran this example, I said to ChatGPT, if my stop loss is always $100, meaning if this comes back to me and it hits a negative $100, if my stop loss is hit, but then all the multiples after that are $100, right? So I just kept it very round number, very easy to follow. So $100 if it hits my stop loss, and then $100 per multiple. So on this one, like we saw earlier, it is 3-to-1 risk to reward. So I ran all the numbers and I gave to ChatGPT all the data, and this is what it gave me. So if I check the hypothetical, right? So 1R is obviously going to be the safest, because you're only betting that's going to come, 1R, which is essentially one multiple of this, which would be like to here, right? Something like that. So how often did that happen? It won 27 times. It only lost 4 times that it come back and hit your stop loss if you hold for longer, right? 87% win rate, but you're getting about $2,300. Okay, so that's safe, right? High win rate, pretty safe. 2R. How many times do I get a double, right? How many times is price gonna double up for me? So a double would be like right there, right? How many times am I gonna get a 2R? And it's at 23 times I will win, and 8 times I will lose if I hold on that long. 74% win rate, about $3,800 after 30 days. Now the 3R, I will win 18 times and I will lose 13 times. I will have a win rate of 56%, but my total P&L will be 4,100. And so that turns turned out to be the best risk to reward for the New York session. Now, there are different numbers for Asia and London. And if you guys are curious about those, go ahead and check out my links, my telegrams, or you can leave a comment and I will send you guys that data as well. And if you hold longer, right, if you start holding for 8R, you will only win twice, but you will lose 29 times. So this doesn't really work to hold on too long, right? 9R, okay, one time it hit 9R and then one time it hit 10R, right? But then 30 days, it would come all the way back, hit your stop loss. So that doesn't work out. It doesn't work out for the New York session for this particular strategy to hold on super long. 3 to R risk to reward seems to be like it is the best risk to reward for this particular trade. So if you guys are interested in learning more, I make calls every single day. I'm going to be going live with this particular strategy during the New York session and the Asia session, since I'm up for both of those. And so this will be something that's ongoing on a regular basis. So if you guys want, check out the Telegram groups. I think that there's a lot of value there because I'm, to my knowledge, the only one using this particular strategy and teaching it in crypto. So all that being said, guys, I hope you have a great rest of your day. If you have any questions, please leave them. Follow if you haven't followed. Share this video. Guys, we're going to grow and we're going to make some good money this year. I hope to see you guys in the next video. Take care.